You're listening to the PGIM India Insights podcast series by PGIM India Asset Management.
Electric vehicles, commercial vehicles, premium vehicles. The auto sector is having its moment right now. But what does that mean in the global economic context? Hello and welcome to a brand new episode of PGIM India Insights. Folks, you've got me, Ahalya, keeping you company. And this is the podcast series by PGIM India Asset Management, where investment experts from PGIM India Asset Management share their perspectives on the most pressing issues impacting global and domestic markets and how you can prepare your portfolio to benefit from opportunities across those markets through these insights. So without further ado, let's dive into a conversation about the auto sector and what it has to do with our investment journeys. Let me hand over the mic to Ankit Jain and Surjitt Arora, PGIM India Insights regulars, for another interesting conversation.
Thanks, Alia. Welcome to the 6th episode of PGIM India Insights. I have with me Surjitt Singh Arora, Principal Officer of PMS, and he will share his views on auto and auto ancillary sector for listeners. Hi, Surjitt.
Hi, Ankit.
So, Surjitt, auto and auto ancillary has done exceedingly well post-COVID. What are your views now on this?
Yeah, so if you look at last 5 years, the Nifty Auto Index has underperformed Nifty 50 Index. So just to put some numbers, during August 18 to August 23, the 5-year time frame, Nifty Auto Index has delivered a CAGR of only 9.1% vis-a-vis 13.8% CAGR for Nifty 50 Index. This is as of 22nd August closing. However, if you look at the shorter time frame, which is 1 year, in the last 1 year, the Nifty Auto Index has delivered a return of 22.1% compared to Nifty 50 Index return of 10.9%. So almost double the return of, the benchmark index. So if I take this conversation forward, if one looks at what marked the sector over the last 4 to 5 years, that is till FY22, there were 3 broad headwinds. The first being, many of the listeners will be aware that there was a transition from BS4 emission norms directly to BS6 emission norms, right? Now, just to put things in context, if you look at the cost inflation, or let's say the cost of vehicle going up because of this transition, on average, approximately the cost went up by 15% during the transition from BS4 to BS6. So that was point number 1 in terms of the headwinds which we faced prior to FY22. The other one which we all know is COVID. So COVID led to a brake on consumption. And adding fuel to the fire, the raw material cost inflation, given that what happened in China, given that what was happening during COVID, the raw material cost inflation went up by approximately 30 to 40%. Now, if I look at the last 1 year where the things have turned upside down, the tailwinds which are helping the auto sector are again threefold. The first being, if you look around us and if I look at our relatives, friends, families, many people are going for premiumization. When I say premiumization, in our own households, we are looking that people are shifting from, let's say, a small car or a sedan to a SUV. So the premiumization trend is catching up in India. Other thing is, which is induced by COVID, post-COVID, people want an ownership of personal vehicle. Ankit, I'm sure that today, if I give you a chance to travel in public transport versus, having your own private car, I'm sure you will go for the latter, right?
Yeah, absolutely. Absolutely, Surjitt.
And again, the last point is the headwind which was there prior to FY22, which was the raw material cost inflation. Today, in last 1 year, it has corrected around 40-50% approximately, and that has lent visibility in terms of margin improvement for the auto companies in India.
Sure. I think, you rightly pointed out, I know a lot of, people around us who never had their own car, and post-COVID, they went ahead and booked their own vehicle because ownership of vehicle became very crucial during COVID time. Surjitt, so what I understand from this is that even though, auto and auto ancillaries, which have done very well in the last 1.5 years, over a 5-year period, they have still underperformed, the benchmark, which is, Nifty.
Correct.
So, for our listeners, if you can, talk about what are the subsectors, within auto, which one should look at.
So as you rightly pointed out, if I talk about, let's say the first part of auto, or let's say the auto companies, which we technically construe as OEM. When I say OEM, it's original equipment manufacturers. These are the frontline auto companies, right? So if I talk about these subsectors within the frontline auto companies, there are basically three subsectors. The first being two-wheelers. So just to put things in context, today, as of FY23, the total automotive volumes in India is around 21 million, out of which almost 75 to 80% comprises of two-wheelers.
Okay.
So FY23 end, if I look at annualized run rate, two-wheeler volumes were 16 million out of the total 21 million. And hence it's around 75 to 80%. The next big sector is the passenger vehicle, which we alluded to, the passenger vehicle, the personal mobility, right?
Yeah.
So that segment as of FY23 was around 39 lakh units, or let's say 3.9 million to be precise. And the third sub-segment within the automotive OEM space is the commercial vehicle volumes, which stood at 9,62,000 units. So almost closer to 1 million. Now, this was on the auto OEM part. When I look at the supply chain, or when I look at the auto ancillary space, it has huge number of subsectors. But for the benefit of listeners, I will keep it short. Just to give you some sense and some examples, the biggest segment within the auto ancillary space is the engine components. This is followed by the powertrain, or what we call it as a transmission, which is your gears and all, right?
Yeah.
Then in commercial vehicle, you have axles, which is front axle, back axle, so on and so forth.
Yeah.
And then there are certain segments like wiring harness, lighting. Today, you will be surprised to know that in the new cars which are coming on road, the kind of sensors which are getting used, or the kind of software which is getting used in the vehicles is at a lifetime high, right?
Okay.
So sectors like sensors, sectors like, software, and some basic sectors like tires, batteries, steering, which are the heart of the vehicle, continue to be the mainstream for auto ancillary companies. So just to put things in context, no original equipment manufacturer, which is the auto OEM, would depend only on one or two suppliers.
Yeah.
They also want to mitigate the risk, and they don't want to make themselves over dependent on a particular supplier, right? So ideally, any OEM which is there in India will diversify among many suppliers for the same component.
Sure. So, as you rightly mentioned, that, these companies don't depend on one supplier, because, if something happens to that supplier, then the whole supply chain and the whole manufacturing of these vehicles, which, during COVID time took 9 month to 12 month waiting period, can, get affected even more. So good, you highlighted that. So, Surjitt, within autos, where do you see value may be generated in the next few years?
So yes, as I highlighted earlier, right, in auto OEMs, which is the frontline auto companies, it depends on new launches that may help them in terms of gaining market share. So again, going back to my point, when we as customers upgraded in life and went to SUVs, right, the new launches which were happening during the last 2 years, that created enough excitement in the market. And in turn, because they started selling and people had a craze for these kind of vehicles, the market share of respective companies also went up. So what I'm alluding to here is the premiumization trend, whether it was two-wheelers or whether it was four-wheelers, both continue to remain. And I believe this trend is likely to continue in the near future. Now, if I come to auto ancillaries, the component manufacturers, in my view, the companies which are engine agnostic, or let's say powertrain agnostic, may benefit and may not be impacted by the transition to electric vehicles. So some examples, like today, whether it's internal combustion engine, which is the old technology, or let's say it's an electric vehicle, the tires which go into the vehicle, the lighting which goes into the vehicle, the sensors which go into the vehicle, the steering wheel or the wiring harness broadly remains the same. So any company which is engine agnostic, I think they will have a good time going forward.
Sure. So you continue to remain bullish where premiumization is actually happening, be it two-wheeler or four-wheeler.
Absolutely.
Okay, so when we talk about automobiles as a sector, what are the penetration levels of India as a whole? Be it two-wheeler, four-wheeler, compared to maybe a developing economy like China or a developed economy like US.
Yes, you are absolutely correct. So we are a developing economy, and given our per capita income, India in terms of penetration is still at 59 per thousand, versus if you compare it with China, it's around 226 per thousand population. Whereas in the developed economy like a US, the penetration is very, very high at 908 per thousand people.
Oh, so the penetration level is actually very low. Even selling 21 million vehicles in a year, still the penetration level is 1/4 of what a developing economy like China is having. So long way to go.
Correct.
So Surjitt, this brings me to my next question, which is the world is actually moving towards EV, and you've been also talking about it, right? And so is India. But what is your take on that? How have been EV panning out in the last 4-5 years? How have they done?
So before I get into numbers, I will give you a context about this. So if you look at our government has been very, very vocal about, pushing EV sales per se. So if you remember in 2019, Government of India came with a policy known as FAME policy, which is nothing but faster adoption and manufacturing of hybrid and electric vehicles. And it was launched in the month of April 2019. And now, given the acceptance of EVs and given the investment in EVs, this has been further extended for a period of 2 years till 31st March 2024. So what happens is, because of this incentives given by the government, there is a quite good adoption of EVs specifically on 3 segments, which is two-wheelers, three-wheelers and buses.
Okay.
So in our own research, we believe that public transport will be at the forefront of EV adoption. Because just to give you an example, today if a bus is going to a particular route and you have a depot of buses where they are parked, you know exactly when to charge the bus and what route it will take, right? So it becomes very easy to guide these vehicles as well as to charge these vehicles, because there is a set distance to be covered. However, for you or me as an individual, I believe four-wheeler EV penetration will take some time to pick up. There are some reasons for the same. First, even if you take into account the subsidies, the cost of acquisition of an EV currently is well above the affordable levels for an average Indian consumer. Second, the anxiety in terms of the charging infrastructure or the range, it still continues, because as a country, we still have to do a lot of work on the investment in terms of infra network for the charging infrastructure. And third, today there are very, very limited players in this space and very few options for the consumer to choose from. Given these factors, I believe on one hand, definitely public transport will see the light of the day in terms of faster EV adoption. On the other hand, EV transition in terms of personal mobility, or let's say four-wheelers, is likely to take a while and may happen only once the technology evolves and battery costs which come down. For the benefit of the listeners here, today the passenger vehicles which are there with EV technology, approximately 35 to 40% of the vehicle cost is the battery cost. So unless and until globally the battery cost comes down by a meaningful amount, the inflection point in terms of the pricing of the vehicle is some time away in my view.
Okay. So, with government FAME policy intact, we expect that EV transition to continue to pick up pace, especially with two-wheelers, three-wheelers and buses. And, there's still some time away for passenger vehicle, transition to EV. So, as you highlighted, within, the entire auto two-wheelers and buses have had these EV penetration picked up. But what are these penetration levels of EV, overall? If you can, give us some numbers. Out of the total sales, how much percentage of it is EV now?
Yes. So let us start with two-wheelers first, because that is where the major penetration is happening. So just for clarity, if you look at two-wheelers overall volume and then break it down between scooters and motorcycle, today scooters is 1/3 of the two-wheeler market. So let's say 33% is scooters and 67% is motorcycles. Now, if I do the math and if I look at overall two-wheeler volumes, and within that the EV penetration, it's only 4.6%. But as I mentioned in my earlier remarks, if you look at within two-wheelers, scooter is the segment where the penetration seems to be a lot higher. So just to put things into context, overall two-wheeler, the EV penetration as of FY23 is only 4.6%. But if you look at EV penetration within scooters, which is one third of the market, EV penetration within scooters is 14.6%. So compared to a 4.6% overall within two-wheelers, in scooters, the penetration is 3x at 14.6%. This is as of FY23 end, which is March 23.
Yeah.
Similarly, if you look at passenger vehicles, as we highlighted earlier in our last question, is that passenger vehicles still the penetration is very, very minuscule. So just to give you a number, today EV penetration is only 1.2% in terms of passenger vehicles. And if you look at public transport, the point which we were discussing earlier, in buses per se, the penetration as of FY23 end is 5%.
Okay.
So just to summarize, scooters will be the higher penetration at around 14.6%, followed by buses, which is public transport, at around 5%. And then comes personal mobility or passenger vehicles, where the EV penetration continues to be quite low at around 1.2%.
Sure. Good that you summarize it pretty well, because there are too many numbers here. So across autos, how are you positioned in the PMS strategies which PGIM runs?
So if you look at both the strategies, core equity portfolio as well as Phoenix portfolio, approximately our exposure to auto and auto ancillary sector is around 11% as of 31st July 2023.
Okay. I think both these products have done pretty well, and over the last 2 years since COVID, auto and auto ancillaries have helped these strategies to do well. So, let me, summarize, today's discussion for our listeners in 4 points. So one would be, auto and auto ancillary, which actually has done very, very well in the last 12 to 18 months, still continues to underperform over a 5-year period compared to Nifty. Within auto, wherever premiumization is happening, we like those companies. Third, with government FAME policy intact, we expect, EV transition to continue to pick up, especially with two-wheelers, three-wheelers and buses. And as and when, the cost of the battery and availability of charging station increases, I think penetration of EV in passenger vehicle will also pick up. And last, that across our PMS strategies, auto and auto ancillary comprises 11% of the portfolio. Surjitt, hope I have summarized pretty well for our listeners.
Absolutely.
Thank you so much, Surjitt, for sharing your views, for all of us. And thank you, everyone, for listening to us. I shall see you all soon on the next podcast.
Well, numbers and statistics aside, that was definitely a very riveting and informative conversation, right? Who knew the larger impact of the auto sector runs this deep? With that, we've reached the end of this episode of PGIM India Insights. Now remember, while the conversations may give you insight into how you can develop your portfolio, it's extremely important that we as individual investors seek the advice of a trusted financial advisor to figure out exactly what works for us. We're all unique and we all have very unique investment requirements as well as journeys. Okay? We'll catch you on the next episode very soon. For now, this is Mia Halya signing off. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You're listening to the PGIM India Insights podcast series by PGIM India Asset Management.